The COVID-19 pandemic is throwing up new challenges to Africa's banking sector, with warnings from the IMF that the pandemic's largest threat to banks being related to their loan portfolios. Similarly, Moody's changed their outlook for the banking systems in Nigeria, Morocco, and South Africa to negative from stable. And I have with me Adeosla Adeduntan, who is the Managing Director and CEO of FirstBank of Nigeria and subsidiaries, and he joins me now from Lagos to discuss the future of banking. Thank you so much for joining me on the show today, sir. And I'll first like to get your assessment of the health and economic impact of the COVID-19 pandemic on Africa and in Nigeria as a whole.
Thank you, Kenneth. Good to be here this afternoon. The COVID-19 pandemic is an unprecedented health and economic crisis. It actually started off as an health crisis, but that is quickly morphed into an economic crisis. Today, virtually all the economies across the continent and globally are on lockdown, and there have been massive disruptions to supply chains, financial markets, and so the impact is quite significant. Globally, the IMF estimated that the global GDP would drop, the global economy will contract by as much as 3%, which is even higher than what we saw during the 2008-2009 global financial crisis. Coming home to Africa, the estimate is that the GDP of Africa as a continent will contract by as high as about 1.6%, driven largely by contraction in the GDP of the large economies, South Africa about 5.8, Nigeria about 3.4, Angola by about 2%. So the impact is quite significant and is the biggest thing that both the political and the economic leaders in Africa that we have to confront to ensure that we minimize the downside impact on the economy. Because again, because the economy of African countries are largely trade dependent, we export commodities, largely to the US, China, India, and to the EU. Over 60% of our export goes to those countries. So the slowdown in those countries automatically gets transmitted back into this continent. If you also look at the impact of the lockdown across the country, across a number of the host countries all over Africa, the impact is quite significant.
So let's get to the impact on your sector specifically, and I'm trying to understand what the new normal is for banking and how we can sustain these essential banking services in the face of a pandemic like this.
For the banking sector, I will look at it from different dimensions. One thing that is very clear, especially in the Nigerian banking sector, and I've seen this in a host of the relatively large economy across the continent, it's the fact that we've started a migration from brick and mortar to click and mortar before the crisis. So what the crisis has basically done is to force upon us the need to accelerate. If you look at a country like Nigeria, when we had the lockdown, we basically had to shut down virtually all our branches, and even the ones that were open, they were offering partial services. The implication was that we migrated a number of our customers, a huge chunk of our customers were migrated to the alternative channels, ATMs, online banking, mobile banking, and the USSD banking platform. So it's, in our view, what this has done is that it has forced an acceleration of the migration from the brick and mortar to the click and mortar. I'm not saying the branch networks will no longer be useful, but what I'm saying is that that migration is an irreversible migration, and customers today would like to be served from the comfort of their phone, from the comfort of their homes. So banks that will survive are those banks that have made the required level of investment in technology, especially digitization. And the investment that were made years ago will not necessarily be what is required today. So it's an ongoing process of increasing investment that enables us to serve customers in the way they would like to be served going forward. So moving from brick and mortar into what I call contactless type of service.
All right then, but very interesting, enhancing the digital capabilities for the banking sector. And definitely, as you rightly said, the investment need to have been made years ago, and that's going to trickle down into how banks are going to stay ahead. But I'd like to get your thoughts on how banks can better manage their exposure to the hardest hit sectors.
Very good question. One of the key areas where this COVID-19 and its twin brother, because COVID-19 basically led to the collapse of the global price of crude oil, although that was also enabled by the infighting between two key producers, Russia and the Kingdom of Saudi Arabia. However, the impact on the oil and gas sectors, the manufacturing sectors have been quite significant. But the good news is the central bank, specifically in the case of Nigeria, has been working with the banks to ensure that banks were given the leeway to work with our customers to restructure a number of their exposures. And that is going on quite well. In the long run, it is our economy, and we are being pragmatic and being reasonable in dealing with the current challenges. Some of the things we're doing is restructuring some of these exposures, giving the customers moratorium on principal repayment, sometimes pushing out the repayment to align more with the revised cash flow coming out of their business. So there are a number of things that we're doing to ensure that we support our customers during this crisis. And I must commend the proactiveness of the central bank under the leadership of Governor Godwin Emefiele. The support has been rendered to the sector has been quite significant.
All right, quite interesting there. Definitely quite a lot to talk about, and in the future, the banking definitely would like to pick up this conversation with you at some other time if you're available. I'm speaking to Adeosla Adeduntan, the Managing Director and CEO of FirstBank of Nigeria subsidiaries.